Hi everyone, it is Sunday, September 11th, 20 years ago today, and we know what that is, and actually it's 11/11, Sunday morning. The markets are in a very interesting place to us, very interesting. We made a little video view of a Rinko chart, which we'll take a look at in a moment or two, but we're going to go through our paces as we normally do every night, and on Sunday we like to slow everything down and take a good hard look at where we are. By the way, we're doing this for our monthly members, our annual members. We do this every Sunday and every evening to give them a view of our primary algos. Our annual members, of course, have all of this on their desktop. We're also going to upload today's video to YouTube. We don't usually do this. We will today. We have a lot of new people from all over the world, all over. Spoke with a very nice gentleman from El Salvador. We've had other folks from Europe. We have members in Germany and in Budapest, and of course here in the States. We're not trying to be right? It isn't about being right or wrong in the market. If you're honest, we believe, if you're honest with yourself, I can make a case for the market going up or the market going down just about all the time. What we're trying to do is to use mechanical robotic systems so that, yes, we might build in a little bit of a bias, right? We don't want to be completely delta neutral. We won't make any money. The only one who will make money will be the exchange. But what we want to do is structure our trades such that when we are wrong, which we will be wrong, that we do not have any negative outliers. Zero negative outliers. You see, it's not the winning trades that make the difference. It's that big fat losing trade that you get trapped in, or that big commitment that the market is bullish and I'm just going to put on a whole ton of call options, and then they do a bit of a rug pull. So you need to have discipline and patience, and we're going to give you a view of some of the systems that we look at. You're going to see the signals that have already been made. Please understand, for folks that may be seeing this, it takes a few weeks to get comfortable with this. We are available for our members to explain what it is they're seeing and to help them become more comfortable. This particular segment is where we look at something called the Nicholas timing model. The Nicholas timing model. It is very unique. Most of our systems are looking for the long trend, the short trend, the counter trend long, the counter trend short, right? This particular system is meant to pick up on market vibrations. And I'm going to explain to you in a moment just how it does that. When these market vibrations get suppressed, the markets have a tendency to go long. When these market vibrations increase, the market has a tendency to get short and to come in. The signal comes at 5 p.m. on a daily basis. Not every day, but it comes in at 5 and it needs one tick to open at 6 p.m. at 6:01, and then the signal will come in, and our members will pay very close attention to Nicholas. They may trade it individually with a mini, and let me just show you. On September 7th, the YM went long. A 1 mini contract, you're up 29.75. 6,635 on the NQ. The ES 4,437.50. The long 2,635. And then this is a short VIX signal at 950. Collectively, $17,000. Now, 1 mini is a sizable trade today. Folks may play this using a micro. They may play just one market. They may use this for options. they may use this just as a barometer as to what side of the market they want to be on. Its performance is incredible. If you are seeing this and you want to know what Nicholas has done for the entire year, please send me a request by email, and I will send you a private video. It's very impressive. In fact, I can even go back 10 years if you'd like. We're not presenting Nicholas, though, or any of these systems as a holy grail. There is no such thing. But there is probabilities. And these systems are, we think, very sound and very good. Now, Nicholas, how does it work? It is operating off of a chart, a daily chart. In each of these daily charts, there's nothing for me to see. So I can't go to the chart and show you a candle formation or a moving average or a MACD or anything traditional. What it does, we feed the data stream, of course, of each market into that chart. But we also feed a second data stream, the VIX futures, and the yield on the 10-year Treasury. And there is a math formula. And it was a concept that we looked at years ago. We wrote it, developed it, back tested it, forward tested it, and it's proved to be very, very sound. That's what it does. And that's what it's showing. The previous signal, I could not say this because our members are hearing this, so if you're seeing and hearing this on YouTube, the previous signal was completely short and long the VIX. By the way, the VIX is a confirming signal. We would like to see the markets all long and the VIX short. That tells us it's pretty solid. And it usually happens on the same day. Sometimes we get a little warning a day, anywhere from 24 to 72 hours in advance. But they're almost always inverse. The previous signal was a short signal. And the run-up here was probably close to 40 some odd thousand, 40, 50,000. Not unusual at all. The highest run-up that we've had was close to 260,000. And that was, of course, COVID, but that happened, and it was very interesting. We all knew about COVID in January and in February, and the markets were running and running. And then in late February, Nicholas tripped, and 3 weeks later, it was up 260 grand. And we can show you that. So it's very, very good. We believe that when it comes to people's money, they will act. They may not act on other things. They may say and do other things. So we don't really have to listen, we believe, to the news, the narratives, the stories of the day, or anyone else's opinion. Why? They will vote with their money. And we will see it. And many times it's here. So tonight, this Sunday, even though we think that we're in the middle of the river, and the markets could go either way, right now, Nicholas is telling us since the 7th that they're headed up. By the way, and we did share this with our members, and we're reminding them, the September contract rolled to December on Friday. The December contract will be dead on the 16th. This will be a big options expiration day as well. The Fed is jawboning these markets right in here Wednesday. We were warning when the markets were selling down in here prior to the 7th. We were warning our members, and you'll see some of the tools that we were using, that there was a strong likelihood that the markets were setting up for a bounce, that it was a little bit of a bearish trap, and that professional money many times does not like to get short in a big way before the contract roll or before the Fed, but particularly in front of the contract roll. Now that we've had this bounce, and it's been significant, the question is, where and what are we going to be doing over the next few weeks? So we're going to go through our algos together, give you a view, give our members a view. They know. I may take a little extra few minutes to explain what it is you're seeing. If you're seeing it for the first time as someone watching on YouTube or interested in what we're doing at Stock Market Caddy, if you have a specific question and you want to call me and chat, I'm happy to. All right. So let's keep moving. In this module, we're looking at the VIX itself, and we're looking at the VIX through our product called Swing Machine. The VIX daily futures is very important to us, and this tells us whether there is an appetite for risk or not. The VIX has been suppressed, and it really has been risk on for the last 54 days. So from the VIX future standpoint, they are not seeing any specific concern right here, right now. The spot VIX, the 9-day spot VIX, went risk off 8 days ago. It's pausing, but it's still what we would call perky. The 30-day VIX is concerned, risk off caution. The 90-day had been risk off and it went back to risk on resumes. So it's very much a mixed picture, but again, it's perky. And this shows us buying pressure in the VIX structure, right? And this is what is creating that view on people's charts that you're looking at, and it looks mixed. Looks like we are in fact in the middle of the river, and we are. Now, when you're setting up your trades, whatever it is you're going to do, we're not going to make specific recommendations to buy or sell anything, but there are some things if you become versatile in what it is you trade. We like to trade futures during the day, during normal session hours. Why? They're highly liquid. Yes, they're leveraged, but we trade with surgical precision. Why not get paid? If we stretch out, we might trade futures for a day or two, or a little bit further out. If we go further out, we might drop down our leverage. We might go from minis to micros. Or if we want to go even further out, we might define our risk with options. We're always defining our risk so that we do not have any negative outliers. Let's look at skew. We don't have enough time to explain skew here, but we're looking at the trend of the skew. And it's been trending down for 8 days. And this is what we've been telling our members, and it's still very low, below 120. As the market was coming down, the skew was very low. And here we are bouncing up. What is skew? Skew tells us the big money. Are they buying puts, getting protection on, or are they putting on call options? A reading here in trending down tells us as we were coming down and people were fearful of a major crash, that the big money was not that concerned. By the way, not to confuse, we'll just go back. A VIX reading, it isn't the number on the VIX that is important, it is the trend. But a VIX reading at 23, 25 does mean that the S&P futures, or S&P itself, can move 1 to 2% in a matter of hours. It's still very volatile. Normal volatility is between 18 and 22. And anything below 18 is that, and trending down certainly, is when, any Tom, Dick, or Harry can be buying call options and making money. When it gets up in here, not so easy, right? Now, trading intraday is a different animal, but and we think easier, but that's conversation for another day. I'm happy to discuss, option trading, which we do, versus futures trading. This is the yield curve. This is 90-day paper, 5-year paper, 10-year paper, 30-year paper. This is the yield. It isn't 29%. You would actually move. It's the way it's reported. It's actually 2.9, 3.4, 3.3. This is the actual yield. And the yields are all rising and been rising. This, notice the yield on 5-year Treasuries is 3.446. 10-year is 3.3. They're inverted and they've been inverted. And the 5-year is very close to inverting with the 30-year. This graph shows us the spread between 10-year paper and 90-day paper. And this is a problem. Why? Banks borrow money short term and loan money out long term. When the yields drop, and we think the yields will be dropping on the 10 and 30 year, and when they do, this will go negative. And when it does, the markets, we believe, are going to get rocked. The yields will drop on the 10 and 30 year. Retail people may interpret that as credit easing. It isn't. It's credit tightening. The banks will not be able to make any money. And what they will do is they will tighten their loan standards and reduce money in the system. And when you reduce money in the system and the rates continue to rise on the front end, which we think they will, that is a big problem. Let's look at the futures sentiment. This is where we get a very quick view, especially nightly. On a daily basis, we can do this on a weekly or a monthly. This represents the mean. Here, once again, is another view of the VIX. Very interested in the VIX. The VIX right now is below the mean. So the market is not terribly concerned. What we want to know when we look at this gauge sentiment is what is in panic, what is in euphoria. Why? We know any market that is in euphoria over the next 20 trading sessions, it is 95% likely to move back to the mean. And the same is true over here. So what do we see here? We see the VIX basically in the middle. We see the markets not even in the middle. They were down here. They were panicked. We had a nice bounce. We had a nice rally. We're not even above the mean. And if VIX increases this week and gets above its mean, which we think it could, in anticipation of what the Fed might do in the next week or God knows anything else, these markets could be right back down. And any, speculation that we're in a new bull market will be right out the window. We'll keep going. Here are the currencies. The big story, of course, is the dollar contract. We'll come back and look at the dollar again. The dollar has been very strong. It was up in euphoria, it pulled back in, and those currencies bounced. But the dollar has been the strong market around the world. The strong dollar has kept gold suppressed, and the metals, for that matter. We're seeing a little bit of a move in platinum and in silver. Silver off of the lows. We don't short down in here. I would be looking to be getting long gold. We'll keep coming. Energy. Oil. We were down here last week at around 82, and we were suggesting to be a buyer. Heating oil has bounced. Nat gas was much higher, has gotten beaten up. I don't want to be shorting it now. Might be looking to get long some nat gas at the beginning of the week. Same thing with unleaded gasoline. These are the Treasuries, 5-year, 2-year, 10-year, 30-year. When interest rates rise, Treasuries go down. Important to know that. If you've been trading and don't know that, you do now. It's important to know. The 10 and 30-year was in panic. We don't short Treasuries in the whole, especially the 10 and 30-year. We think the 10 and 30-year Treasuries will rise. We think those yields are going to come in. We don't think the yields are going to come in that much on the shorter term paper. And that's what's going to cause the inversion. And it'll be in the months ahead, and you'll be reading and hearing about it at that time, and maybe watching this video. But that's what we think. And people then will be saying in recession. We think we're in recession now. Cryptocurrency daily. This is just a sentiment gauge. We're going to look at these markets another way as well shortly. Bitcoin. Bitcoin was in panic last week, underneath 20,000, 19,000. We told everybody, don't short Bitcoin down here. You want to be a buyer of Bitcoin. And it has bounced, and it's back above its mean. The softs. The softs have bounced. They had been in panic, and they've been back and forth. They've been trading wonderfully, and they're moving back above the mean. And live cattle also was back here, was a little bit of a panic sell, a little bit of profit taking maybe. Its mean is 144.45 and back above it. Okay, let's keep moving. Let's look at the sentiment indicator for ETFs, exchange traded funds. We have a lot of members that have IRA monies or trade stocks in the ETF, exchange traded funds. So the futures give us a little, they do act a day or two in advance. But here is the VIX on the ETF. You can see not much concern. That gives me concern. When the market gets, when they're selling volatility, they get a little bit over their skis. We'll see how the market opens tonight and tomorrow and this week. I don't think we're out of the woods by any means. Markets, but we'll sum up at the end and how we're playing it. But we present the information for everybody. We always remind our monthly members and our annual members. I take pains not to give an opinion or a forecast on the market. I can be wrong. I try to show what the tools are showing us, how I might be interpreting them. But in time, as you see the market play out, not just over a few days, a few months, it does take years to really learn. You'll recall and remember and begin to develop your own confidence and hopefully trading your own game. You're entitled to that. The gold miners are getting a bit of a bounce. They had been panic sold. All the market had been in panic, and they have come out of that panic. We were telling our members over the last 10 days, we're going to get a bounce, and it is going to be a significant bounce, and we have. Now, this is the question of where we are. Are we going into euphoria again to play back the other way? We're in the middle. Maybe you want to play options long and short, right? Put a collar, that sort of thing. You can do that. Not illegal. There are the Treasuries, energy, pretty much the same view as the futures. Here are the international markets. And as well, they were in panic. They got a nice bounce. They're now in the middle. Okay, these are daily signals and tabs. We're going to go to what we look at on a Sunday, and this is what we call the consolidated view of all the futures markets through the eyes of Swing Machine on a daily, weekly, monthly basis. Now, I do not have enough time to explain everything that's here. I'm happy to do that for anyone that wants to call and chat about something specific. You cannot control what the market does, but you can control what you do. Have you ever thought through what those controls are? One of the things is that you can control is certainly the amount of leverage, what you choose to trade. But another big consideration that people maybe never really pin down is, what is your interval? Are you trading intraday one day and then later the same day trading on a daily? Are you trading on an hourly basis? Are you trading on a weekly basis? Or are you just flinging paper around? Here we give our members, Swing Machine gives our members a view of all the markets on a daily, weekly, monthly basis on how they're positioned. How you work this information gets into having good acquired trading skill to understand. And we can't begin to do that here today or tonight. But the VIX on a daily basis has been short for 54 days, as you've seen. And if you had shorted it, that's how much you would be up. The Russell, even with the bounce last week, on a daily basis, Swing Machine, the trend is still down. It's been short for 6 days. Yes, it's at odds with Nicholas. They're measuring two different things. The trend on the Russell is still down. The ES on a daily is down. It is underwater. That's what's unusual. Usually it isn't. But the trend is still down. Had a little bit of a bounce. The weekly trend is down. By the way, the weekly on the Russell is down. The Nasdaq daily is down. The weekly is down. 30 weeks ago, you'd be up some 28 grand. The monthlies are along monthlies, but they're in a dip. And the Dow is short. The weekly is short. So that's what is giving me pause about this bounce that we had. I think it was just a technical contract rollover bounce. We expected it. We planned for it. We profited from it. But I don't think it's sustainable. I think these daily signals on Swing Machine are going to become profitable pretty soon, and these weekly trends are still in place. It's very difficult to turn and flip, these trends, and it works the same way when they're long. Now we come down and you can see, I can't comment on every market, but the currencies. And what is the problem for these currencies? It's the dollar. The dollar. Now this is crazy, and I want to share this with everybody. You hear and see on the internet that cash is trash, right? The dollar index, or the dollar futures contract, went along 144 days ago. 144 days ago at 95.88. And it's still long. Yes, it's pulled back. It's had some pullbacks, but it's been long. A trend. On a weekly basis, 58 weeks ago. On a monthly basis, a year ago at 92.93. Now you might say, well, bagger, that's only 12 grand. A futures contract in the dollar is how much leverage? One. About $1,800. $1,800. A person who had put one futures contract along the dollar back in February, $1,800, 2 grand, now has over 12. 600%. If you had put in 20,000, 6 times, 120 grand. The dollar is strong. It's been strong. Maybe it will weaken. I'm not going to even comment. Probably will, but that's what's been going on. Also, notice 144 days. This is the signal, by the way. This tells us the number of days long and the number of days short. And this is the time and this is the date. Notice the euro. If the dollar went long 144 days ago, the euro went short 140 days ago. A euro contract uses about $3,500 in margin. You're up 17 grand. Daily, interval. Now, if you are a trader and seeing this, or not a trader, and you're seeing this, and you see the money and you want the money, I get that. Everybody wants the money. Everybody sees the money. But you need to have acquired trading skill to get the money out of the market and into your bank account. And it isn't enough to watch one video, read one book to get that done. It's like everything else. You won't get it all. But if you are reacting to the money and the money alone, you'll be reacting to greed and fear. You'll be acting on emotions, and you won't make it. It will kill you. Now, I also talk to a lot of people, and some people will say to me, I'm afraid. I'm afraid, Don. It scares me sometimes. I'm trading in simulation. I'm scared. I'm worried. The emotions of fear, you need to understand, where is that born from? I've studied it. I believe, when you think about it, that fear is born from not knowing expectations, not having a grounded sense of expectations. When you don't know what to expect, when you haven't been through something before, it creates anxiety. It creates fear. What we try to do at Stock Market Caddy is provide a forum, a mentorship to help you overcome and to go slowly. We've been through this before with many, many other people. And there are techniques and tips. Believe it or not, at one time in my earlier career, not doing this, in an earlier career, I had a fear of public speaking. It is odd because I was in the public view. I worked with surgeons all the time. I had no concern getting up and speaking in front of a group of surgeons, 50 or 100 of them, or a couple hundred nurses. Not a problem at all. But getting up in front of my peers bothered me. I could do it with 5 or 10, but if I had to do it with 100. And at the time, I was being groomed for bigger positions. And the company that I was working for picked up on it. And they said, Don, we had a little conversation. They said, this is going to be an issue for you. We need to help you. I said, okay. And they sent me to NYU. Not to go to school there to graduate from NYU. I'm not saying I attended a program for 3 months at NYU, paid for by my company, with one goal: to teach me and 3 other people how to speak in public. And after I went through that, they couldn't shut me up. I didn't know what I didn't know. I didn't know, the difference. So what we try to do is, from a trading standpoint, and I digress there a little bit, is to help people begin to understand and make them aware of what they don't know so that they can, grapple with it, internalize it, and turn a weakness or a fear into a strength. It isn't easy. You have to want to do it. But if it is a phobia, fear and anxiety is one thing, but if it is a phobia that, is just, it may not be something worthwhile. If you have a phobia of heights, for instance, it may not be worth, spending your money and your time taking pilot's lessons, right? if you have that deep-seated phobia. But fear, anxiety is normal, and you can overcome it. Let's keep moving. Yen, daily, short, 18 days ago, 5 grand. 81 weeks ago, 30 grand. 117 months ago. Gold. Gold has been short, yet I said I don't want to short it here. I don't. On a daily basis, it's been short for 18 days. Right? So, and we got a little bit of buying. All right, so I'm going to scroll down. I kind of digressed there. We got a lot more to show, but here are the relevant markets that our members and our monthly members want to see. I love helping people over the hurdle of their fears. I do enjoy that because I know how rewarding it is. To cave into those fears is unfortunate. And up we come. And here we're looking at support and resistance and center cut. As a general rule, I prefer to be a buyer off of the low and a seller off of the high. So this is yet another tool that we can quickly, and you can slow the video down and to see what you need to see. Now, consolidated view for the ETFs. I'm going to just kind of slide down. Can't comment on every market here, but you can slow the video down and to see the signals. Now, the trade purse is based on a $10,000 investment or trade because they're not leveraged. And we slide across. And up we come. So a lot of information here. Now, we don't show the daily, weekly, monthly every night. We then will just drop down to the daily. And we're not looking at the daily now, tonight. We're seeing it all consolidated. The commitment of traders report. Okay, and I'm not sure why I'm not getting my commitment of traders report here. We're particularly interested in the non-commercials, what they're doing, and the small specs. We like to kind of follow these guys in general, and not follow here. I'm not getting my data today, so I'll have to be in touch with TradeStation. Unusual. I'm not sure if it's TradeStation or my computer, but I will say this: the ES for weeks and weeks and weeks has been massively short. Very unusual. For years and years and years, it was 250,000 contracts long. Last week, it was 250,000 contracts short. They're selling. They are selling or hedging. Let's move to the Mcclellan Oscillator. The Mcclellan Oscillator shows us, this on a weekly basis, the breadth of the market. The breadth. This is on a weekly basis. This was the COVID low. Here's all the money printing. And as we were going up, the breadth of the market was headed down. Ultimately, we got a little faint and then that break. And then as we get down in here, the breadth of the market started to increase and the market did respond. The last 3 weeks, not last week, this is last week, the 3 weeks before, a pullback, and then a reversal, and it appears to be an engulfing up, and the breadth of the market looks better, a little more constructive here than it was over here. A chartist will look at the weekly and say, this took it out, this is a bullish wedge, and we're going higher. That is a chartist, and they'll be looking at moving averages and RSI and all of that stuff. We will look at it maybe through a Rinko or a price chart, but we're going to follow our algos. Now, the daily signal we will look at tomorrow, but I am going to show everybody from an intraday standpoint. This is really incredible. Here is Swing Machine. Here is the daily signal. Here it is here. And 7 or 8 days ago, the trend is down, and they are underwater. They are. But what our members can do, and what they do is they can trade they can go down even smaller, but this is on a 60-minute view. And the 60-minute is really, really popular with us for position trades. We get inside the day, and we can use options as well. 52 hours ago, 6 grand. 51 hours ago, 8,700. 50 hours ago, 3,100. 51 hours ago, the VIX does what? It goes short, confirming the buying was coming in. 1,751 hours. You mean to tell me, Don, 500 stocks, Nasdaq, representing hundreds of stocks, they all went within an hour or two of each other? Yes. And you can do the math from here. So if a person did use Swing Machine to get short up here, and they saw the hourlies go long, they could hedge themselves. So Swing Machine is a fantastic tool for hedging. Another skill, though, that needs to be learned. Most people, they hear the word hedge, they don't understand why a person would do it, they certainly don't understand how, and it needs to be practiced. And it's just one more of the things that we try to do and show real time and how and why during our Q School. Okay, so now we're going to go, let's give you a view of some other tools. We're 41 minutes in. This is a tool that we call the Trade Generator Pebble Beach. Let me bring this in so you can see the little chart here. And here are all the signals that came in on Friday. Now, the purse represents $10,000, but here they are. There were 24 buy signals, and all of them are in the money. Don't have enough time to explain how that triggers, but so we do trade stocks. So all these buy signals for any of our annual members that have this, do have it on their desktop, they could have been taking their stock trades from here. And many times these trades, can go on and on. So they would have been buying Apple. Why did that do that? Let me bring that chart. I'm sorry, what's happening here? They're overlapping. We're doing some work. So here is the buy signal right there. Okay, let's keep moving. All right, I'm going to come here. This is for our option traders. This is the one place that we'll look at moving averages. Why? We know that the retail crowd use moving averages, so we want to, at a glance, see what they see, and that's about the extent of it here. This tells us on the stocks and ETFs we've got loaded in, what percentage over the 5-day, 10, 20, 50, 200-day moving average. Many times, money managers in the United States will not buy stock unless they're over the 5-day average. So they're over the 5-day, they're over the 10, and they're putting pressure on the 20 and the 50. Can they get over the 200? If they do, then it'll be more easy for the asset gatherers and the wealth managers to get money shaken out of the pockets of the American people to get them to put it into the market. So it's important to know. What stocks are leading the charge? Well, we can sort. And here they are. And we're going to show you the top 100. So we're going to scroll down. You can slow this down. But these are the stocks that are trying to lead this most recent rally out. Important to know. What stocks are the weakest? They could, be still up for a decent trade, but here they are. And we'll show you, it's not even that many. Right? What is this? This is going to tell us the stocks expected to make the biggest move over the next, I want to know, over the next 20 days. What the markets are expected to move. The diamonds, the Dow, 5.69%, 6.52, 8.35, 8.4 over the next 20 days. It could be up, could be down, a little both. We're going to have really good volatility, though. a big move. Where does this come from? It comes from the options market. What stocks are expected to make the biggest percentage move? These stocks. Doesn't give direction, but it tells you where the jello is going to be moving on the plate. Let's scroll down and show you the top 100. So if you're an option trader, these are the stocks you want to be looking at. We will be. Maybe you don't want the percentage, maybe you want the point moves. So let's sort that. Booking.com expected to move 300 points. And these are the big point getters. Again, not giving you direction. It's not giving us direction, but it's telling us, and we're going to give you the top 100 point getters. And we do look at this every night. PayPal expected to move 20 points. Important to know. All right. Now, we only got 15 minutes left. I want to show, for those that might be passing through, this is Swing Machine for stocks and ETFs. There are 500 stocks there. What I'm going to do, and it tells us the trend. So there's a lot of information here to consume. I want to show you, out of 500 stocks, this purse represents a $10,000 investment. If you shorted Newmont 94 days ago with $10,000, you'd be up $4,000. That's a 40% return short. If you had bought something called apartment investment, kind of interesting, AIV 49 days ago, you'd be up 3,400, 34% return. So this signal, this gives us the trend, gives us the entry price, the T time, even the date, and even support and resistance. What I'm going to do is I want to scroll down. Out of 500 stocks, don't let me make you too dizzy, but pay attention to the purse. How many are in the money? Okay, out of 500, 285. That is a very low number for us. That shows how mixed maybe the market might be. Usually we're 400, right? 285. Let's scroll down. Now these yellow ones, they are entries. So we're 309 out of the 500, either profitable or flat. And then yes, we do have losers, little drawdowns, but they're usually pretty small drawdowns. And that's probably the biggest, a little surprised with it. Not the best percentage. We're usually profitable in, like I say, about 400 of the 500. It isn't that Swing Machine doesn't lose trades. It does. But what it does much quicker, much better, and more disciplined than a human, including me, is to get out of them. And when you have something like AIV, long for 49 days, it's probably going to continue long. And something called Albemarle, and something called Cardinal Health. And this is where our members get their stock ideas, not from the IBD, not from CNBC, not from me, from these tools. Now Nasdaq 100, let's do the same here. Let's look at the signals. Here are the most recent buy signals, just about all in the money. Here are the more recent short signals, and the shorts are under pressure now. They got caught a little bit. We look at, I'll sort them the same way. Well, that's kind of crazy. Playboy, what in the world? Oh, it's short. Okay, I'm like, it's long. $4.50. I wouldn't want to be shorting that thing down there at 451. But it would have generated that much money, almost an 80% return short at $27. That's crazy. We have a member that was talking about Playboy. I think it's Ryan. Ryan, I hope you're not in it still. He was talking about it up there. It's been a complete dumper. And so let's once again scroll down, pay attention to the profit win-loss, long and short, and out of 100 stocks, Swing Machine is profitable in 60. All right, so that's a low percentage out of 63. Usually we're up around 80. Okay, so some of them got caught. And we'll also show you, if you are a Rinko trader, a range bar trader, point and figure, this tool is what we call the SMC Brick, Box, and Range Bar Dynamic Calculator. This tells us if you want to trade on an intraday basis, what size brick you should be using, give or take, and how much that brick is worth. If you are trying to mimic a daily, that's what it should be on any of these markets. And if you're an investor and you want to be seeing what the investor class, this is the size bricks. Sizing the bricks, this is dynamic. Now, it may not change from day to day, but it certainly changes from week to week, because I can tell you the ES used to be down to 2 points. It used to be at 3 points. It's at 4.82. It's increasing with the volatility. The biggest mistake people make in trading these range bars and Rinko bars is they size the bricks based on the amount of money they want to risk. And that's not good. Let's look at a traditional chart. Here is the S&P. And bear with me. This is the S&P. That was the ES futures. This is the S&P. Let me drag this in. So we have some traditional tools here. We commented as we were coming down. We told folks, look for a true low to be established, which was right here. That was the true low. This bar, that was the true low. And then we went lower, and our percent B did not. And we said, the moment it reverses, we want to be looking to be a buyer. It was a false low, and we have now bounced. That's about it. Now we got all the moving average monkeys out there. You know, we're above the 50, we're under that. You know, if it's not the 10 moving average, they're meaningless to us. We don't use them, but we put them on so that we can see what other people see. And that's where all the confusion will be. In our view, this is still a bearish setup. Let's look at the VIX. Or just come back here. This is, if we're looking down, it has a bearish view. If you're coming back here, this is the conflict. It could be perceived as a bullish view. So it's conflicting. It's why we don't get in here and try to map out charts all the time, because it's pretty easy to get a case of vertigo. Am I going up or am I going down? Where do I put it? And it gets old real fast. We rely on our algos and our strategies. Let's look at the VIX though. The VIX is also telling a story though. This is also, look at the little hammer candle on that VIX, right? This is still, this action here to us is bullish. Bullish. And if the VIX is bullish, then these markets could be setting up. So this could be just, again, we're thinking it is a technical squeeze in front of the contract roll, in front of the Fed, to be short-lived and probably suddenly, and maybe by Thursday or Friday. I think this Friday could be very ugly. We'll see. But I think you got to be starting to prepare for it in a spike in the VIX. Any kind of catalyst that gets the imagination of the American people bracing. But let's keep moving. And then this is our Rinko View. And we made a whole video on this earlier yesterday, so I won't repeat it all here. But our view is that this momentum is still down. This was the big move. We're going up basically on nothing, and we think the threat is still down. So where are we? What is a person to do? Well, we have members that took the Nicholas signal, and Nicholas is long. Where they take profits is up to them. The VIX structure is perky. It isn't telling us risk off entirely. It isn't. But it is perky. And it comports with what we're seeing on the chart as well. So we think that we could see and it's still high. It's still high. We're not talking about a VIX down at 18. So we think the market is still very vulnerable here. Very vulnerable. So you want to be careful with your options, not getting lopsided all on one side, or just taking all your money now and throwing it into the market. At least we're not doing that, right? So we think the market, the VIX is perky. The skew is giving us a lot of pause. The skew is very low. It is. It is. And so the skew is not telling us that there isn't a crash here. That's what it's telling us. If the skew was very high, then we would really be bracing, and saying, hey, there could be, this crash. Always on guard this time of the year, especially during the month of September, though, and early October. There's reasons that crashes happen at this time of the year in the United States, mainly because a lot of the professional money managers are closing up their books at the end of October. They want to kind of get their money banked, I think. So we're on guard. Got to be aware. Be prepared. That's all. You don't want to get caught blindsided. Again, tonight will be interesting. But swing machine, the trend, you saw it. The daily trend on the ES, the Nasdaq, the Dow, the Russell is down. It's trending down. And so we just think that little move over the last is a technical bounce. So that's kind of where we are. We'll be mapping out our options, using options for positions, and calculating and defining our risk on how we want to go. And we'll go, pretty far out. We're going to go 40, 45 days. Some of them we might even go 6 months. Intraday is Swing Machine Plus, trading futures. That's it for today. I hope that's helpful to everybody. We wish everyone the best. Members, thank you for bearing with me as we're going to make this video public. This is a sample video of a Sunday night review of the markets for those that might be passing by either today or in the weeks ahead, of what we do for our members. And on a nightly basis, we don't do it for an hour. It's about 15 minutes. We try to keep it 15 to 20 minutes on a nightly basis. And we're looking at our signals on a daily basis, an hourly basis, so that folks have an opportunity to act on it. More important than any of our tools, all of these tools and much, much more is available to our annual members. None of them are available to purchase individually. And the reason for that is more valuable than any individual tool, we believe, is the instruction that we're going to give you in the conversation that we're going to have with each of our members on an ongoing basis, hopefully, to help them. And we also learn too, right? So it's really very much a private club. So with that, we're going to wish our members the very best this week. Keep your left hand high. Let me know what you're thinking. I want to know. I'd love to know how you're positioning. We'll see you in the Zoom rooms. Those of you that are passing by or shadowing us on Twitter, on YouTube, thank you. If you have any questions about what this is about. Trading, though, is an acquired skill. Spoke with another gentleman, very nice gentleman from California. He is a nurse. A lot of respect for nurses. You can't watch one video or read one book and become a nurse. Not a good idea, right? Got to have a passion, got to have an interest, and have to have an education and a mentorship. I'm sure he teaches a lot of new nurses and probably had some great nurse instructors, I'm sure. We wish everyone the best. Have a great week, everyone. If you want to call, can be reached any day, including weekends and holidays, from 9 a.m. to 9 p.m. One of our members called at 3 in the afternoon on New Year's Eve, Adam. Susan said to me, "You going to take that phone call?" I said, "Yeah, I absolutely am." I said, "Somebody's calling me at New Year's Eve at 3 in the afternoon to talk about the markets. That's the guy I want to talk to." Adam, I hope you're doing well. Have a great week, everyone.